And good morning once again. Mark Conter with you at the Messer Financial Office. And again, today we're going to go into the life insurance sales training series. And actually, today we will be doing a makeshift life insurance presentation. And it's going to be a little interesting to try it without really having people to respond and go back and forth with the conversation. And first of all, a little cleanup activity. Your phones are already on mute from this end. And we do ask that during the presentation, if you have any questions, you can find on that box on the column left the questions. Please go ahead and add your questions there. We'll get to those at the end. And during the presentation, we'll also do a couple of polls. Just number one, to see if you're still with us and paying attention, and number two, to make sure that the information that we've been sharing with you is beginning to settle in and work in your best interest. So let's begin today with the presentation itself. And I like to look at a sales presentation as really being on stage. And it's your show, and you need to be prepared to put on the Ritz. And the way you're going to do that is, of course, be prepared as the agent to have all the material and the props, actually, that you'll be using in this sale. And you want to have those prepared in advance so that when you do go in and meet with your family, you really have this one shot to impress them, to sell yourself, to sell your knowledge, and of course, to sell the product. I suggest when I go in that you should have multiple pens. I like to use a white pad. I prefer a white pad over a yellow pad because I look at the yellow pad as kind of a warning, yield type of influence. Some people like the yellow pad. I don't. I say stick with the white pad. I like to have a calculator available. If you're going to be using your laptop for the actual application process, you're probably going to have it handy. And of course, the file that we've begun to structure with all the information that we have been sharing with you in the previous presentations. So as we go into it today, I wanted to make sure that just some basics. Number one, you always need to be well groomed. Your hair has to be combed. You got to brush your teeth and have fresh breath. You should be dressed professionally. Should be within your own comfort level, but for men, basically a suit or a sport coat. Tie is always optional. And ladies, to have that dress, skirt, or pantsuit. Limit your jewelry. Limit your perfume to a scent not quite as heavy as you might want to wear out on the town. And always just a note to the ladies that you need to always be aware of the fact that you can't pay too much attention with the husband. That could also put you in a situation where you're alienating the wife from the actual presentation itself. So be careful with all those little things and be prepared to work from that format. In your file, you should have the documents, not only that you're going to have to review with them, but to leave behind a set of those same documents for their information. And I'd like to always say that, it's best that we be that upfront and be that open, as we were in the very beginning when we documented information on the fact finder, and we let them know that everything we were taking from them that we needed to use to prepare ourselves was being done in confidence, that we would hold it that way, and that they could be assured that it wouldn't be shared any other way, but that the most important thing of the information you're going to share today, you do want them to have documentation. It also adds the additional credibility to what you're doing. And today what we're going to work with are the quotes that we have designed from the short-term product. I also designed that in a fashion that we limited those to 3 options and to 2 carriers. And for the simplicity, I also made the same selection of options and carriers for both husband and wife. In other words, there were many other carriers, and we could have mixed this up and had information to share from one carrier and then a different one for the spouse. But I find that at times confusing, keeping it simple, preparing for the fact that when they're making the payments that they're going to make them to one carrier always makes it easier. Now, there are going to be circumstances where a better choice might be a different carrier, and then you're just going to have to go with it at that point. And again, too, we're also going to add into our presentation the illustrations of the life insurance with living benefits. And in this case, I've gone ahead and limited that down to one carrier. And you should all be aware at this point that that was working with the American General Partners. So with that in mind, if we can go over to our first polling question, please, Rebecca. And I hope that you have had a chance in advance to go in and download those documents from our presentations in the previous weeks. And participation right now getting closer to 50%. Get a few more people in here before we close off the poll. Getting closer to 70. Okay, I think we can close it off at this point, Rebecca. So a little bit more than half of you have already downloaded those documents, which is great because we're going to use those today. It's going to be much easier if you've got a copy of them in front of you that you've already printed, or if you've got a second screen that you're working off of that you can pull those documents up. Now, let's begin with the fact that, again, we're prepared, we're clean, we're groomed, we're ready, we knock on the door and we enter the home. It would be very important as you first go in the home, if you can find something of interest, something that appeals to you that you can compliment them on. It might be something as simple as the fact that the home is in neat and clean order. It might be an unusual piece of art that they have. It might be an antique piece of furniture. It just might be that the hardwood floors they have are lovely, or the granite flooring that they have. You want to find something that you can express again as an interest and a sincere compliment. Please don't make it something that's fake or fraudulent, because your client's going to read right through it. So again, it's just part of your warming them up to you. Hopefully, as you come in, they'll lead you to a table where you're going to be able to do your presentation. And if not, it's going to be your first opportunity at this time to go ahead and take control and make sure that you get moved over to a table where you can share the information much easier, and again with a better control element, both for your speaking to them directly and to your actually getting the eye contact and making sure that they're with you as you go along. Always, it's important too in how you position yourself at the table. You really want to make sure that you have the husband and wife sitting directly across from you so that you can face each of them right to left, versus having one on each end of the table and you're in the middle. And that gets into what I call the ping pong game of information, and you're going back and forth and you're always turning your head to either side, and that is really not a good situation to have, and you really don't have control. So once you get into that situation, then we want to have the small talk. If they offer you something to drink, of course something non-alcoholic at this point, that would be a good fact, because that would show that they actually have a comfort with you being in their home, and also that perhaps that during that information gathering you found something out about them personally. I'm talking about when you were there and getting the information on that fact finder, and then you had said we were going to go back to the office and prepare this information. So hopefully you picked up something. Maybe they were going on a family vacation. Maybe they had a child graduating. Maybe they had a family member visiting them. So anything that might have been taking place in that absence of time between your previous visit, if you can go back to it, ask how it went, And again, it just is a reclarification of your interest in them. And again, it must be done in such a fashion that you come across genuine and don't make it sound something that's fake, obviously, or you're doomed. You also want to, at this point, compliment them on setting aside the time for them to discover the options, and that you want to thank them for the opportunity they've allowed you to service them with their insurance needs. You do also want to take this time to reinforce the fact that you are an independent broker. You're licensed, you're appointed with numerous carriers, and that you personally owe no allegiance to any one carrier, as would be the case if you were a captive agent, that being one who will only show you the products from that one carrier's line. And you want to let them know that that allegiance you have is really to them, and that it becomes your responsibility then to find the best product at the best price that will be the best fit for their needs. So I would at this point also refresh their memory that in the early planning stages, you gathered information that would allow you to discover the potential health rating that they may have as determined by the carrier. You want to let them know, of course, that at this point you've done your due diligence and that the information you're going to share with them is the best determination that you have as to how that underwriter will rate them. But of course, with the caveat that you have no control over that final outcome. You'll be better than if you have determined if it's not a carrier. Your hope it will be better that you hope that the final underwriting decision from the carrier will be better than what you had actually determined, which is going to make your job much easier. But you also have to let them know that they have the final decision, that no matter what the carrier comes back with as an offer, it's up to them to accept or reject that offer. So you're kind of putting them at ease, and also you're kind of setting them up, and you're making sure that if things come back adversely to what you had anticipated, that you can, of course, make the carrier and the underwriter the bad guy. And, of course, that you can use the same information to cover any objections you might have at the end regarding the fact that that rate came in differently than you had originally presented. So that gets me to my first most important point. I like to believe that when I complete my homework and my due diligence and my preparation and go on stage with that client, that I've lined things up in such a fashion that I have eliminated step by step potential objections that could come in later. And you're going to see that as we go into the close and as we talk about different elements that we've worked with the information that we have. So if we could then, what we'll do next is we'll just go over to the sheet that we would now be presenting to Thomas. And the first bit of information that we're going to share with him is the fact that we have outlined for him that basic $1 million of coverage. We've done this over a 20-year term. We've rated him at a preferred non-tobacco rating. And what we've been able to discover from our work with the carriers is that, to the best of our knowledge, we can do this with the waiver of premium with American General for about $62 a month. Now, we also want him to know that there are, of course, other carriers in the market, Transamerica being one of them, and that with their product, they also will give the same benefits, but the suggested price from them is $76. Now, I also want to add at the third step that with that same company at Transamerica, we are able to offer them the Trendsetter LB. And that LB is the living benefits that we had brought to their attention much earlier, perhaps even as early as the phone call that we originated with our mailings about the new insurance. So that, again, we're bringing back to their attention that there's an opportunity today for the first time for people that have life insurance to tap into the policy value in the event that they have a chronic health condition or a critical condition. And that, of course, these additional benefits do come at a cost. And of course, that cost, as you can see, reflected in the fact that for Transamerica, their product goes from $76 to $103. But again, we're going to review those basic additional benefits, and they'll be able to see why there's a value in them. At the same time now, we're going to go ahead and move over to Louise. And again, we're going to work with the same numbers. We're going to start with that American General product. Again, her term for 20 years for $750,000. Again, as we determined in our previous work from our fact finder and from her human life value, her work, etc. We also wanted to make sure we added in that waiver of premium because she is a working member of the household. And then we also determined that we were going to add in the child rider. And the child rider was going to be for those two kids. So with this particular package, as we've designed it, again, with American General first, we've got a premium of around $50. We did pull up the same product with the same benefits from Transamerica. And we have that product coming in at about $65. And then again, just as we did for Thomas, we went to the Trendsetter Living Benefits product, and we brought that in at about $77. Now, when we're looking at the information, they can basically see one of the things for the children, when we're adding on that living benefit or the benefit of the child rider of life insurance at $25,000, it's about $10 a month, which is actually a little less than 50 cents a day. You kind of want to minimize that type of coverage exactly that way. So you're going to be able to insure your children for about 50 cents a day. Now, what's actually happened in the background to all of this as you're going through it, between when you gave Thomas his numbers, he's thinking about the 60. When you came over and gave Louise her numbers, she's thinking about, and he is the 50. So right now, what they've put in their head is about $110 a month. So you have already been aware from previous meetings with them that their comfort zone was right around $100 a month. And I would come back and I would acknowledge that. And I would say that, you know, when we last met, you felt you were comfortable with $100 a month. And as you can see, we've come very close. We're at around $110 a month. And that additional $10 is really taking care of the insurance that we need on the children. So I would then ask the question, are you comfortable with $110 a month? And of course, I'm going to go silent just as I did for you for a moment. I want them to give me that answer. So again, $100, $110, are they comfortable? We want to get that sure, that yes answer from each of them. Be sure you do get it from each. If you don't, be sure to ask the other one if they were comfortable with that. And they're going to, of course, come back across, and you've got that opportunity then, in case any little things do come up. We'll talk about some objections later on, but anyway, just want to make sure you get a buy-in to 110 versus the 100. Okay? Now, I'm going to also add at that point that I'm glad I could come up with a plan that would work within their budget guidelines. But I think I failed them because I failed to provide them with the best coverage. Again, I want to be silent. I want to give them an opportunity to respond to my personal failure. Hopefully, I'm going to get the response from them. What do you mean? How did you fail? Why aren't you providing us the best coverage? So that it's going to open the door for me to come back in with the statement that I truly believe that the best coverage for their family would be coverage including the living benefits, and that if I could design coverage that would cover them both with those benefits, that would be a home run. So this is going to give me the door to open up now and move on and go over to the quality of life product that, again, I hope you have downloaded, because more so than ever that you're going to have this in front of you. You're going to have, again, 2 copies, the one that you have in front of you and the one that you're going to slide across the table to Thomas. And I'm going to make the statement at this point that years ago, one insurance company came up with a plan that later on was called accelerated death benefit. And what this company did was they promised to pay 50% of the death benefit to the insured if for some reason they were diagnosed with a terminal illness. And if that terminal illness was diagnosed by a doctor that would give that person 12, 15, 18, 24 months to live, that company would be willing to pay 50% of that death benefit in advance. I would then ask the question to them, have you ever heard of that benefit? Again, I would be silent. I would wait for them to give me a response, either yes or no. It doesn't matter what they say. I would continue on then and say that, when that took place, the industry as a whole bought into it just as well. And they found out if they didn't add that terminal illness rider to their policies at absolutely no cost to the client, that they were going to find themselves in a position someday as to be losing the battle for new business and allowing the other company to continue to gather in those benefits. So the fact that one company came up with the plan that they offered at no additional cost, forced the other companies to grab a hold. So I would say that based on that information to them, again, what we're seeing today, and you'll see here in just a moment as we go into a comparison on Louise. Okay. I'm sorry, I've just kind of got lost here in my own notes. We didn't finish the presentation on Thomas, so let's continue with Thomas. I'm sorry. So again, with Thomas, with this particular product from American General, we're showing that he's going to have his 20-year term. He's going to have his $1 million face amount, again under the same death benefit. And we're going to have this come in at a premium of about $66, $67. Whoops. Again, the benefit to the product that we're offering today, and again, it's in fine print. I apologize that you can't dig down, but I hope you have a copy in front of them. You're going to be able to show them what the initial actual premium is, what the additional cost of adding the waiver of premium rider is, and that you can see that the accelerated death benefit is added here, but at no additional cost, so that again, we're coming in with a premium of $66.95, $67. And just the basic information page again. Again, we're going to talk about the fact that provided with this policy, there are additional benefits. We're going to review those in a more depth place in just a moment. And we're going to go ahead and kind of jump through this and go right back to the one with Louise. And again, on Louise's product, again, we're going to open that up and show them that we are again coming in with the $750,000 plan. And we are again bringing her in at that preferred rating. And we're bringing in a premium on this plan of $54. So if we've done it at this point, again with a slight pause, we know that for Thomas, the 67, we know for Louise, we're at 54. And again, we can assume what's going on in their minds is he's already done the math and he's thinking about $120. So this is the fine line that it's going to make for you, where it's going to be necessary to sell these benefits. And really, it should be an easy job because you're already had a buy-in at 110, and now we're coming in at about 120. So we got a $10 difference, and all you have to do is sell these benefits to sell $10 more a month to their budget. So really, the setup should be made just perfect under the conditions. So you want to touch on the fact that when we get into the benefits themselves, and we'll start with any of the riders that you have, the fact that the waiver premium we added, and we did that so that, again, if anything should happen to them due to a disability type nature, that any premiums that would be due on these policies would be paid by the company. So it would eliminate that from their financial obligations, which is a great benefit to have. You could also mention that the old school, the accelerated death benefit, that again, God forbid something should happen, and either of them were diagnosed to be in a terminal condition, that they would have the accessibility to accelerate that benefit and receive additional funds from that policy in advance so that they could be used for the care that was needed or for other things the family might want to enjoy and do together when we have these last times. Then, of course, we're going to go into the benefits of the critical illness, and we're going to talk about the fact that critical illness is going to cover a heart attack, a stroke, invasive cancer, and then again, the additional benefit of a chronic illness, so that if for some reason either of them were unable to perform two of the activities of daily living, that they would also qualify again in advance for some of those dollars from that face value to be used towards that need. So again, with that in mind and all the benefits, we would also touch lightly upon the conversion. And I don't think, let me see which page that comes up on. Yep, okay, so. And I would only, again, on the conversion, it might only be something that I would say that you're also going to have a conversion benefit. If they ask what that means, I would go into detail. But really, I'm saving that as another bullet later on. I'm saving that for actually the day that I come back with my policy. And that's when I'm going to review that particular, and we'll see that in the, excuse me, the policy delivery stage of the presentation. But I would only mention it. And then again, too, we would want to make sure that we do a little bit better job in the description. So the next polling question that I have, if we could put that up, please, Rebecca. And again, I've asked if you've had a chance to go ahead in there, and if you're already appointed with American General Partners, that you could actually get it. Or if you took it from my presentation last week, hopefully you did, and you downloaded it. And the reason that you want to have the brochure is it's in color, of course, number one, and it brings out the benefits in a verbiage that they can see much easier. So again, we'll close off the poll here at this time, Rebecca, and it does appear that about the same. Again, we've got about 50% that have downloaded it and 50% that have not. So let's go on and talk a little bit about it. Let's talk about the quality of life, and again, the brochure. And again, this is where the first fact is that I can kind of touch on convertibility. But again, I want to kind of blast through that. I really don't want to make that a point of interest. Again, too, what we've done today is we've customized the product. We've done it in such a fashion that we're covering the husband and the wife, the children, and we're covering needs that they may have that they haven't even thought about going forward. You might use this brochure in a number of different ways because, again, today we're talking to a husband and wife. And one of the things that we had talked about originally was that they were protecting their home. But it might be that you're working with a single mom or a single dad for that fact. Again, you might be working with an older couple. So again, you're going to kind of focus that back down to what their needs are. But most importantly, you want them to know that this is a type of insurance that's going to be available when they really need it, not just, unfortunately, at the time of a death. And again, the little brochure can help you in that manner. We're going to also talk about the flexible term itself. Not a lot of time there. And we can get into how it works. But before we do, we would kind of go over those benefits again. And what we would talk about is the critical illness benefit in the brochure. Let's see if I've got it in this further one down. I think I do. Okay, so this particular brochure would have got really down into the dirtiness of what we needed to bring out, exactly what that waiver premium meant. Again, on the child insurance, that we would describe the fact that it was available to them until they reached the age basically of 25. And we would also let them know that there's an additional benefit with this that would make that child available for other insurance without any additional underwriting if they could go ahead and do something for that child with a new plan later on in life, which again would be after that 25th birthday. So there's an enhancement that the rider is not only for that insurance for now for the child, but the possibility to convert that into another product for themselves for that child should they face some health issues later on and even find themselves in an uninsurable situation. So these are all, again, the benefits that we would have brought to their attention. Now, the true critical illness benefit that I was looking for, and I'm not sure which brochure I pulled this from, and it might be even in the fine print of these here, but the critical illness itself has a 30-day waiting period and 90 days if it's an invasive cancer after that policy is issued in order to qualify for it. The chronic illness acceleration reviews the activities of daily living that's required, again, 2 daily living situations. And again, briefly though, without getting into too much detail, excuse me, you could ask them if they have any questions and let them avail themselves to that. And you could go ahead, of course, and address those questions. After you have completed the actual review of the benefits, you've actually put yourself in the situation now where it's really time to ask for the order. And I would make a statement to the effect of, Tom, Louise, you can see that I have prepared for your family a level of protection that you probably didn't even think was available or existed before we met. I have taken the time and chosen a carrier for you that I believe is a quality carrier and an innovator in the industry. And what we've been able to do is, for your family, the coverage for yourself and your children in the amount of $1,775,000 will now be in place for you for the next 20 years. What this is going to do, of course, is bring to you the peace of mind, something that you won't have to ever think about again. And I would believe that that type of peace of mind is well worth the $120 monthly premium. Wouldn't you agree? That's pretty much it. The point of silence. Wouldn't you agree? Wait for that response. And really, if you've lined yourself up and done the things properly to begin with, you should get the agreement, which would bring you obviously to the step of taking an application. Now, it wouldn't be uncommon at this point that they may have some question. So again, you want to make sure that you can answer those questions. You want to do it calmly. You don't want to let it ever look like you've been rattled by whatever question or even objection they might bring up. And if they do bring one up again, we want to use that basic procedure of the feel, felt, found reply. I understand how you feel. Many others have felt the same way as you. However, what we have found is, and that would be where you would fit in whatever that particular objection was and cover it. Now, I think most agents get pretty concerned that they're going to have objections that they can't cover. Again, I actually don't believe that's even going to happen if, again, you do your job in the very beginning and make sure that you've lined things up. And if, though, you find yourself feeling that you need some additional help, what I'm going to suggest is, and I don't have it up on the screen, but please make a note. The website is www.mdrtstore.org. And what this is the $1 Million Roundtable website. This is strictly for insurance people. You do not have to be a member to get into the store that I'm suggesting. If you want to investigate it more and seek registration, of course, you can't really become a member of the $1 Million Roundtable unless you have the productivity of $1 million in premium in a given 1 year period of time. That's the actual acknowledgement of the MDRT, but you can access again for the store. And why I want you to go there is you're going to find this book, the MDRT Objections Handbook. Now, this book has been updated over the years, but what you're going to find in there is a place for you to go ahead and do your studies in advance. And it's going to give you many, many of the possible objections that could come up. Anywhere from the question about, well, I don't believe in life insurance, or I'm not interested in life insurance, or I don't need to buy life insurance, or I need to think about it. I want to touch on that one a little bit, the think about it one. Again, remember when we were doing our original fact finder, we were doing discovery. Hopefully, when we did that and we found out that they had an attorney and I don't remember if it was Tom's brother or sister, and likewise they had an accountant, and again in that case we were saying it was Louise's brother and sister. One of the things we would have done when we found that out is we would have asked the question, do you rely on either of them when you're making decisions for your family, personal financial decisions? And you're probably going to get the no, of course not. We make our own decisions. But of course, if they had brought it up, you would have, at that time, way back in the early stages, said to them, will they be responsible for helping you make a decision on your life insurance? So if you clean that out in the beginning, which is what I'm suggesting, you're not going to have it come back later on that they have to go see their accountant or they have to go see their attorney before they can make a decision, which they never are going to do that anyway, okay? But the fact is, you eliminate it. You also make sure that they are the decision makers, and you can always come back and use that again when anything else comes up, that of course they had led you to believe that they could make these decisions on their own, and what is preventing them from doing it today? Well, hopefully they don't come back with I can't afford it, but if they do, of course, again, you should have put yourself in a position that really you built yourself up from the $100 that they said they could comfortably afford to the $110 when we added the children rider, and we could have said, for just $10 more a month, we've got your kids covered, that they were comfortable with that, and you got an agreement. And then again, you went on and you added the benefits of living benefits of the critical illness and chronic conditions for only another $10 a month. Now, you wouldn't have to, but you could go back to the fact that if you would have presented them with a separate critical or chronic illness policy, the cost would have been much greater. But again, that's not what you did. You blended it all and you brought it all in at that $120 a month. So hopefully, again, you never have that objection that they can't afford it, that you've covered that. Again, if you'll pick up this book, though, I think without me going into it today, you're going to find it to be greatly beneficial to the normal types of questions you might have come back to you. Perhaps what we'll do in a future webinar is just go into the methodology and the way to properly handle objections and use some of these. Probably wouldn't hurt to do a class strictly for that. But again, my focus is that I firmly believe when you prepare well enough in advance, all the documentation and all the arrangement of information to share with them, you should eliminate most objections that could possibly take place, or have done them in a previous manner, as we did with the attorney or the accountant. And this is kind of what the cover of that book looks like. Sorry, I can't get into it any other detail. I don't want to invade any rights that they have of publishers. So take a look at it on the website. If you're interested, I do have a copy here in my office if you ever want to stop by and see it before you make the investment. But I think it's well worth the investment that you would make to have that handy for yourself. Now, as far as next week, as we go into it, let's go into the next polling question, if you would please, Rebecca. And again, we're looking to find out from those who are with us today if they have had a chance already to go in and register on the Messer website for electronic app processing. And that could be for any carrier. That doesn't have to be strictly for this American General Partners product, the one that we feel most comfortable with. And again, I think we can go ahead and close that poll then at this point. And again, we're coming up right at the same fact, about 50% of you have had the opportunity to do that. If you haven't, again, we're going to make that kind of your homework for next week. Go into the www.messerfinancial.com and go on in and do the beginning steps of doing a quote, which will take you to the iGo app. And from the iGo app, if you have not registered in the past, you'll have that opportunity to register so that it'll always be open and available to you when you go forward. And again, something very similar works out when you work directly with the carrier websites, that they take you through the same process. But we've kind of formulated it all so it's down to one place for you. And let's see what we have today in questions. And that's a great question, Brian. He wanted to know if that premium that we saw on the illustrations covered both children. And actually, Brian, that is true. It does. Premium is the same if it was one child, if it would have been two, if it would have been three. The benefit, too, is that should they have children added to that family down the road, which is one of the reasons why you always want to make sure you're doing some type of an annual review. And the annual review could be just simply finding out with a phone call if there's been any life changes, especially when you're working with a young couple, as in this the case here, that yes, they could have a third child. And if they did, it's simply a document you would draw off of the website to add a child to that rider, and there would be no cost, no additional cost. So children today and children tomorrow, all the way until they reach that age of 25, provided that they're single. So, of course, if they get married before age 25, it does eliminate it, but it doesn't eliminate the possibility of them doing a conversion of that child product into a single freestanding policy either. And again, you're going to find all the details on how that works when you look at the brochure. And then someone said to me that the screen information was different than the QI download. And if there is, Tom, it's probably because I've gone back and forth in my preparation and downloading things. The one that you should have downloaded does have everything on it. The dollars should amount to the same, and that should be able to work for you. And then I also have a question about the waiting periods that come in. Well, again, if a critical illness is diagnosed, it has to be 30 days after the policy was issued. So it's a protection to the insurance company. A critical condition should not have existed when it was underwritten, or they would have discovered it, and it would have changed the whole picture, the whole rating, and possibly even that there would have been no offering, probably no offering at all. So it should not have existed prior to. Taking an application, and again, that's one of the things we're going to talk about next week. You do have the right to go in and ask for conditional coverage. We'll talk just a moment about our presenter next week, but if they had conditional coverage, they already have started the policy technically in the best interest of their protection. But again, from the date the policy normally is issued, there has to be a 30-day cool off in case they were diagnosed with a critical condition. And then in the case of cancer, they're asking for a 90-day cool off. So it's not that the policy is held back, but the benefit might not be provided unless, again, it's 90 days after, which would make sense, of course, even with cancer. That wouldn't have been, if it were diagnosed earlier, the policy wouldn't have been issued. Could it be unfortunately diagnosed as soon as 30 days after a policy was taken out? I suppose it could happen. Unfortunately, it would be very rare. Um, but again, obviously, there always is that possibility that they wouldn't have that opportunity. Now, one of the things that would happen, though, even though they couldn't exercise the benefit for the funds available for the um, illness of the cancer, because that cancer was diagnosed to be more terminal, of course, then we're back into the fact that they could accelerate that benefit because of the terminal condition. So I hope that that answered that question. And then the question came up on my presentation of the policies. So what I kind of did there, Cynthia, just to let you know, on the 3 policies that we compared, we showed the American General product without living benefits. So we had a dollar amount. We then compared it to what would be apples to apples with the Transamerican product that did not have living benefits. So that was a fair comparison. Then I threw in on that one the Transamerica product with the living benefits. But if you remember, the dollar amount on that for Thomas alone was $103. So I was kind of doing a little sleight of hand there, Cynthia. I was giving them a mental picture for Thomas at 60, and then wow, $100. And then when I went into the actual illustration, no, the one I used for the American General Partners was not any of those 3. It was American General again, but it was with the living benefits, and it was for less money than was the presentation on the living benefits for Transamerica. It was in fact at $67, and I did exactly the same thing with the presentation on the wife, using the apples to apples American General to Transamerica, adding in the Transamerica Trendsetter living benefits at a much higher rate, but then came back with the American General Partners product for her at $54, which is where I was able to tie the whole thing back together again and say that for $120, we provided everything. So that's why you needed all of that information to look at and piecemeal back together. That was kind of the puzzle, and that was kind of the way I took it through the mapping to bring it to where I wanted to get with the best product with the best price. And let's see, we have another question here from Brian. The current minimum premium for the accelerated amount specified, less certain deductions. Okay. The guaranteed minimum benefit, what it means, Brian, is there's possibility, number one, that a claim could have been already offered on this policy for, let's say, a cancer. And there was a claim paid. There's more detail in it. I don't want to get too confusing with it here today in today's presentation, but it gets into actuarial circumstances where, based on the fact that it is a cancer, based on the fact of your age, based on the fact that you will probably live a quality number of years afterwards, that the determination is made as to the amount of benefit that will be paid to the insured. Whatever benefit is paid, of course, is going to reduce the face value or the death benefit of the policy. Okay. And also, it may be at a greater amount because there's a greater likelihood that they would live longer than, say, an older person that has that diagnosis. And again, it's all actuarial. I can't really give you an exact percentage or dollar, but it does change the death benefit so that, again, if God forbid, after the diagnosis of a cancer and survivor, there was a stroke or heart attack, it again would pay, but because of that, there would already have been lesser amount available based on previous deductions that could cause that policy to have less to pay again. But it would pay. The fact of the matter is it would pay. And the fact of the matter is that even after it would have paid out in 2 instances, there still would be money left to pay out if the case of a death with that policy also. And then again, too, with the chronic condition, it's going to trigger a certain amount that's going to be accessible, again, based on the age. Again, it's going to reduce the death benefit, but again, there'll always be a death benefit available, partial from what the policy originally was. To really understand it in more detail, I would want you to go ahead and take a look. Again, when you get appointed with American General Partners, you're going to have to do a brief certification. And in that certification, you'll see some more of the detail and even a little bit more in some of the other brochures that I didn't, get out in great detail as far as how those riders work and how those benefits are paid. So you still have more, you do have more homework to do, if I can say that fairly. And let's see here if I have any more questions. Okay, so next week, assuming we've made the sale, we're going to have to take the application. Our guest for next week will be Bob Long. And Bob, like myself, has been around in this industry a long time. And Bob is going to go over with you the applications, both paper and electronic. We're going to stick to the American General Partners, try to keep it simple. So again, that'll be next Wednesday at 9 o'clock. If you will please join us then. And without any other questions, again, if you do in the future have a need to call us, please do at the Messer office. We'll be glad to assist you with our product service department. Until next week, look forward to talking to you all again. Mark Conter signing off. Thank you.